Welcome, traders. Today I want to talk about silver again. I think I possibly miscounted it, but there is still a possibility of a bullish scenario. So I am going to be holding my USAS position that I mentioned having. I'm not going to be selling it. I have a little bit of capital in the bear case scenario to add to it. My price targets, the end game is still the same, but what happens in the short term, I have revised my position on that. So I did set a stop loss for silver XAGUSD in my trading account at my entry price to, keep my profits. That being said, silver could pull back. I think there is a larger probability that it will pull back before shooting up to our price targets, 120 and beyond. There is, I think, still a probability that we are, moving into wave 3. We have that bullish count, but to be certain, we'd have to clear like a $92. So let me walk you through what's happening on this silver chart. I pulled up SLV because I believe most of you will be trading SLV in your brokerage accounts. And I'm going to talk about my trading account where I trade XAGUSD, like the commodity silver futures, in a video much further down the road because we have so much to cover before we get there. So I want to talk about where I initially got this wrong, even though I still made profits in the short term, which I'm happy about. So let's anchor everything at the top, that 120 price target over here. This was a primary degree turning point. That means we're no longer in a bullish impulse. We've transitioned in a corrective or bearish structure. Okay, so this is when people are new to Elliott Wave, this is something that we frequently miss. But if we keep studying, we can pick it up. So that's something you need to know about trading. You got to keep learning, never give up, and also manage your risk, which is what I talked about doing earlier in the video. So from that peak, we can clearly map a 5-wave down move. Primary wave 1, sharp sell-off from 120 down to around 65. Primary wave 2, corrective bounce back up to roughly 92. Primary wave 3, a strong impulsive move into the lower high 50s. Primary wave 4, the current structure we're in right now, choppy, overlapping, and corrective. Primary wave 5 still ahead and likely lower. So this is where you could get into that $30 range. Do I think it will go to the $30? I don't, but it could. So we're going to need to be monitoring it once it gets into the 50s. So here's where I miscounted before, and I think this is a good learning opportunity. I was mixing degrees. I labeled parts of this move using primary wave numbers, but then I switched into intermediate and minor labels without clearly defining the structure, right? So structure and patterns are key. So what I looked like a wave 3 continuation, to me, was actually, most likely, just a smaller degree move inside a larger correction. And so this is where people get trapped frequently. It is a classic Elliott Wave mistake, so I am not alone. Other people have made it before. Not being consistent with degree. When you fix that, the chart becomes much clearer, which is, I feel like, what we have going on now. What we're actually seeing right now is primary wave 4, which is typically sideways, overlapping, and often forms an ABC structure or triangle that I had talked about in earlier videos. Zooming in, this wave 4 is likely unfolding as A up, B down, C up, which is currently in progress. That's where we are on the chart right now. And that puts the market in a decision zone, which I talked about in my video yesterday. Key levels matter here. If the price stays below about 92, the bearish count remains intact. If it breaks above that level, the entire structure shifts, and that's the bullish scenario taking over. And so that's why I'm keeping my USAS, the position that I already have, adjusted my stop loss to my entry price on my XAGUSD, my silver, because if the bullish scenario is happening, I want to ride it. But if not, I want to have some capital left to buy the bottom of this wave. So on the downside, if we roll over from the zone, the next move is primary wave 5, which typically targets a 78.6% retracement, which is around $55. And so that's where I think it will most likely go. But a full retrace, which I think is unlikely but could happen, is toward the $30, $40 zone. So the big takeaway is this: the chart did not change, the structure did not change, but the labeling changed, and that has changed my interpretation. Right now, we're not in a clean trend. It's not clean. That's why it's a little difficult to read. We are in a wave 4 environment, confusing, choppy, and designed to trap both bulls and bears. So people on both ends of the market could potentially get trapped in this wave. The next directional move, up or down, will likely, there's a high probability that it will be decisive, and that is the setup. So let's just see which side the market chooses for now, and I'll update you along the way as I see the market making moves.